Magic Johnson didn't become a billionaire because of basketball. In fact, his first business moves almost ruined him. They were messy, risky, and headed straight towards disaster. But then, in one moment, Magic Johnson made a decision so powerful, it didn't just save his future, it created an entire empire. A decision most people would have been too scared to make. Everyone knows the legend on the court, but off the court, Magic had to rebuild himself from zero. He had to face doubt, he had to face rejection, he had to face the world telling him what he couldn't do. And instead of breaking, he transformed. Magic learned how to take a loss and turn it into a lesson, how to take pressure and turn it into a blueprint, how to take opportunity and turn it into ownership. And that transformation is the real story, the part nobody tells you. To understand how Magic built an empire worth hundreds of millions, you have to start at the beginning, at the first big mistake, the moment that almost destroyed everything he was building. Chapter 1, the failure that almost broke him. When Magic retired from the NBA the first time, everyone assumed he was set for life. He had fame, he had rings, he had endorsements, he had money. But here's the truth most people don't want to hear. A paycheck doesn't teach you how to build wealth, and Magic was about to learn that the hard way. After retirement, he did what many celebrities do. He chased the flashy business, not the smart one. He opened Magic Johnson Music, a record label meant to sign new artists and build a media brand. On paper, it looked exciting. It felt big. It felt celebrity. But there was one problem. Magic didn't understand the music business. He didn't understand distribution. He didn't understand the obstacles. He didn't understand why so many labels fail. This was a reactive business, not a strategic one. And it showed. Within the first year, the label struggled to break even. It didn't land major artists, and expenses stacked up fast. Magic was losing money instead of making it. Some reports estimate he lost hundreds of thousands of dollars in that first run. It was painful, embarrassing, and discouraging. Magic later admitted, "I jumped into something I didn't understand, and business will humble you when you do that." But here's where the story turns. Most people quit after this kind of loss. Most people say, business isn't for me. Most people go back to what they were comfortable doing. Magic didn't. That failure taught him 3 lessons that shaped the rest of his empire. 1, don't chase industries you don't understand. Excitement isn't a strategy. Familiarity isn't a plan. You must know the game you're playing. Number 2, build what people actually need. Magic realized he didn't solve a problem. He just launched a business. And number 3, ownership means nothing without vision. You can own something and still be blind. This moment, this painful, expensive failure became the turning point. But Magic didn't know that something even bigger, even heavier was coming next. A moment that would shake him to his core and force him to rebuild his entire identity. The HIV announcement and mindset shift. Magic Johnson's first business failure hurt him financially, but what happened next shook his entire life. On November 7th, 1991, Magic Johnson stepped up to a microphone and told the world he was HIV positive. The room went silent. Commentators choked up. Fans cried. Newspapers rushed to print headlines like, "Magic Johnson's career is over." Corporate partners pulled back. Endorsements froze. Rumors spread faster than facts. And the world looked at Magic like he was already gone. But here's the part people don't talk about. Magic wasn't afraid of dying. He was afraid of not living, not providing, not building, not securing a future for his family. Because basketball, the thing he built his entire life around, was suddenly gone. No more games, no more contracts, no more identity. And in the quiet moments after the announcement, Magic asked himself a question that would change everything. If basketball is over, what do I have left? Most athletes don't survive this moment. Not emotionally, not financially, not mentally. But instead of letting that fear crush him, Magic made a decision. He would reinvent himself. He would rebuild himself, brick by brick, business by business, deal by deal. He didn't know exactly how, but he knew one thing. He needed a future he could control, a future not tied to a jersey or a league or someone else's approval. This was the identity shift, the moment Magic Johnson stopped thinking like a player and started thinking like a CEO. And once that switch flipped, Magic became dangerous in the best way possible. But even with this new mindset, Magic needed a win, a real one, something to show the world he wasn't done. That win came from a place corporate America ignored for decades, the neighborhoods Magic grew up in. the places companies refused to invest in, the communities everyone counted out. And Magic saw something there that they didn't. Potential, demand, opportunity, value. All he needed was a chance to prove it. And when he took that chance, the entire game changed. Magic Johnson Theaters, his first big win. Magic had the mindset, he had the hunger, he had the urgency. What he didn't have yet was proof. Corporate America didn't believe in him. They respected Magic the player, not Magic the businessman. But Magic knew something they didn't. The best opportunities usually live in the places people ignore. And for Magic, that place was the community he came from. Black and brown neighborhoods across America that major companies refused to serve. For decades, movie theater chains avoided these neighborhoods. They said they were too risky. They said there wasn't enough demand. They said it wouldn't be profitable. Translation, they didn't understand the culture, they didn't understand the people, and they didn't understand the spending power. Magic did. So he approached Sony and said something bold. Let me build luxury theaters in underserved communities. I know these people. They want what everyone else wants, a great experience. Sony pushed back. They said the numbers weren't there. They said the foot traffic wouldn't be enough. They said Magic was dreaming too big. Magic didn't argue. He offered something better. He invested his own money into the project. And when Magic Johnson Theaters opened, they exploded. Opening nights sold out. Lines wrapped around the building. Weekends packed out. People drove from other districts just to see a movie in a place designed with them in mind. Magic didn't just prove the market wrong. He proved he understood something Sony never even studied. Community spending power is real. Here's the part corporate America ignored. Black consumers had over $400 billion in spending power in the 90s. Latino consumers had over $300 billion. But none of that was being invested in by major chains. Magic tapped into a market worth hundreds of billions with companies too blind to see it, and the numbers reflected it. Some locations pulled in 20% higher concession sales than theaters in wealthier zip codes. Several Magic Johnson theaters hit millions in yearly revenue, outperforming expectations across the board. And Magic's partnership stake in the deal gave him real ownership, not just a check, but the success wasn't just financial. Theaters became community hubs, places people felt proud to go, places that made families feel seen. Magic didn't build a business, he built trust, he built connection, he built proof that he understood markets in a way executives didn't. This was his first big win, the win that made companies say, wait, maybe Magic actually knows business. And once he had that credibility, the phone started ringing. But one call was bigger than all the others. It came from a CEO who would become one of Magic's most powerful partners, a man who led a brand that was about to explode across America, and Magic would help him take it to the neighborhoods Starbucks never planned to enter. The Starbucks partnership, the deal that changed him. After the success of Magic Johnson Theaters, corporate America finally stopped laughing. Magic had proven he wasn't just a celebrity with money. He was a businessman who understood people better than the people running the companies. And one day Magic got a call from the CEO of Starbucks himself, Howard Schultz. Back then, Starbucks was exploding across America, but only in certain neighborhoods. You didn't see Starbucks in black neighborhoods, in brown neighborhoods, in working class communities, in inner city districts. Corporate America believed something that Magic knew was wrong. People in those neighborhoods won't pay $4 for a cup of coffee. Magic looked Schultz in the eyes and told him straight, you don't understand my community. People will pay for quality. They just want to feel respected. Schultz hesitated. He was scared the stores wouldn't perform. He was worried the numbers wouldn't line up. He doubted the market. Magic didn't flinch. He told him, if you want to grow Starbucks, you're missing millions of customers. So Starbucks agreed, but not just to a few stores, to a historic partnership. Magic became the only person in America authorized to co-brand Starbucks stores with his name. These weren't just Starbucks. They were Starbucks Urban Coffee Opportunities, a joint venture between Magic Johnson Enterprises and Starbucks. And the numbers were crazy. The performance shocked Starbucks executives. Magic's Starbucks locations didn't just do fine. They didn't just match suburban numbers. Many of them outperformed traditional Starbucks, some by 10%, 15%, even 20% higher revenue compared to stores in wealthier zip codes. Let that sink in. The neighborhoods corporate America ignored were outperforming the neighborhoods they preferred. Magic had just proven $1 billion point. When you respect the community spends money. And here's the part most people don't know. Magic didn't just run these stores. He owned equity in the entire venture. He wasn't an employee. He wasn't a contractor. He wasn't a mascot. He was a partner. One whose ownership stake grew as the store succeeded. Real ownership, real equity, real cash flow. And when Starbucks eventually bought Magic out of the partnership, the deal was reportedly worth tens of millions of dollars. This wasn't athlete money. This was CEO money. This was investor money. This was power. Magic didn't chase the coffee business. He chased the market. The Starbucks partnership proved 3 major wealth mode lessons. Number 1, untapped markets are worth billions. In the mid-90s, underserved communities represented over $700 billion in annual spending power. Magic tapped into that before anyone else. Lesson 2, the right partnership beats a paycheck. Starbucks gave Magic equity, not hourly revenue. A single franchise check would have made him thousands, but equity made him millions. And number 3, culture is a business advantage. Magic understood people Starbucks didn't. That knowledge was worth more than capital. Magic's win with Starbucks didn't just make him wealthy, it made him undeniable. CEOs started calling him, investors wanted to partner with him, brands wanted his insight, and Magic realized something powerful. If I can build theaters, and I can build Starbucks, what else can I build? That question sparked the next phase of his empire, a phase built around something most wealthy people understand deeply: cash flow. And Magic was about to stack cash flow in franchises, fitness centers, and real estate projects that would lock in his wealth for decades. Franchises, real estate, and healthcare. Cash flow. After the Starbucks win, Magic Johnson could have stopped. He could have stayed comfortable, done a few speaking gigs, and lived off his reputation. But Magic wasn't trying to be rich for now. He wanted to be wealthy forever. And that takes one thing: cash flow. Not fame, not endorsements, not hype. Cash flow. Money that arrives every month whether you're working or not. Magic understood something early that most athletes never figure out. You don't build wealth with a salary. You build wealth with systems. So he shifted into businesses that would pay him over and over again. And he started with franchises. Franchises, the undervalued wealth builder. Most people see restaurants and gyms. Magic saw cash machines. He invested in TGI Fridays, Burger King, 24-Hour Fitness, and Starbucks that were still operating at the time. Why these businesses? Because they generate steady revenue from everyday people. Real numbers hit different. A typical TGI Fridays location can generate $3 to $4 million per year in revenue. Franchise owners often keep 8 to 12% of that. That's $240,000 to $480,000 per restaurant every year from one location. Magic owned multiple. Burger King franchises, also strong. Many produce 1.5 to 2.5 million annually. With typical franchise margins, Magic could earn $100,000 to $300,000 per store. 24-hour fitness location? Gyms are cash flow machines. Depending on memberships, locations can earn 1 to 3 million per year. Magic didn't buy flashy businesses. He bought businesses that stay full on Friday nights, Saturday afternoons, and Monday morning. Businesses where people spend money without thinking about it. The result? Stable, repeatable income that made his wealth deeper and more resilient. But he wasn't done. Real estate, the foundation of long-term wealth. Magic then shifted into a bigger stage: urban real estate development. He saw that underserved neighborhoods didn't just lack movie theaters and coffee shops. They lacked quality shopping centers, grocery stores, and retail spaces. So he helped develop projects like the Baldwin Hills Shopping Center, Magic Johnson Retail Centers, urban mixed-use developments. These projects created jobs, community investment, safer, cleaner environments, millions in economic activity, and long-term assets Magic could hold for decades. Real numbers again. A successful urban shopping center can easily generate $20 to $50 million per year in economic activity across all its businesses. Magic wasn't trying to own a store. He was trying to own a location where 10 stores paid him rent. Instead of owning one income stream, he owned dozens on one property. That's real asset building. That's generational wealth. Healthcare and insurance, the quiet power play. While the public focused on his restaurants and theaters, Magic made another move behind the scenes. Healthcare partnerships. He invested in health centers, insurance programs, community medical services, and wellness initiatives. These deals weren't flashy, they didn't make headlines, but they created two important things. One, long-term contracts, and two, stable, government-backed revenue. In business, that's gold. A healthcare center tied to community development can produce millions per year and maintain strong margins because demand never stops. This is the side of Magic most people never see. He wasn't just building a brand, he was building infrastructure. Schools, healthcare, retail, fitness, food, entertainment. Magic wasn't trying to be everywhere, he was trying to be essential. Wealth mode lessons. 1. Cash flow beats salary every time. Magic's restaurants alone likely brought in 6 to 7 figures per year in personal income. Number 2, real estate multiplies wealth. Shopping centers he invested in could generate $20 million to $50 million in economic activity yearly. And Magic didn't just get revenue, he got equity. Number 3, solve real world problems and the money follows. Communities needed food, retail, gyms, healthcare. Magic didn't follow trends, he followed needs. Number 4, diversification is protection. If restaurants slow down, real estate still pays. If real estate slows down, healthcare still pays. Magic was no longer Magic the businessman, he was becoming a business system. But the next chapter, that's when Magic stepped into a world almost no athlete had ever entered. A world of power, influence, and billion-dollar valuations. And before we go deeper, if you're learning something from Magic's journey, please like and subscribe. It helps the channel grow and lets us keep bringing you stories like this one. Sports team ownership, power level wealth. By the time Magic built his portfolio of theaters, Starbucks stores, retail centers, and franchises, he was already a successful businessman. But Magic wasn't chasing successful, he was chasing legacy. And real legacy lives in ownership, especially ownership at the highest level, professional sports team. This is where billionaires play. This is where influence moves. This is where wealth doesn't just grow, it multiplies. And Magic was ready to enter that world. The Los Angeles Dodgers, the door opens. In 2012, the Los Angeles Dodgers were up for sale. The team was struggling financially, morale was low. The franchise needed new leadership. Magic saw an opportunity. He partnered with Guggenheim Baseball Management and became part of the group that bought the Dodgers for $2.15 billion, the largest price ever paid for a sports franchise at the time. People thought Magic was crazy. Why would an NBA player invest in baseball? Why risk that much money? Why jump into a sport you didn't even play? Because Magic understood something the public didn't. Sports teams don't act like businesses, they act like assets, and assets grow. A lot. Within 10 years, the Dodgers valuation skyrocketed. Dodgers 2012 valuation, $2.15 billion. The Dodgers 2024 valuation, $4.2 billion. That's nearly double. Magic didn't need the team to win every year, he just needed to own a piece of it. Even with a minority stake, Magic's portion of that value increase likely represents tens of millions in wealth gained without lifting a finger. That's ownership. The Los Angeles Sparks, expanding influence. Magic didn't stop with baseball. He acquired part ownership of the LA Sparks, one of the WNBA's most iconic teams. This move wasn't just financial, it was cultural. The WNBA was growing, women's sports were rising, sponsorship money was increasing. Owning a WNBA team meant expanding brand influence, supporting underrepresented athletes, stepping into a growing market early, and leveraging cross-team relationships in LA. Magic wasn't just buying teams, he was buying influence across the entire city. LAFC, the next generation play. Magic then joined the ownership group of LAFC, Los Angeles' major league soccer team. This was a strategic move. Soccer is the fastest growing major sport in America. MLS franchise valuations have exploded. LAFC's estimated valuation today, $1 billion. One of the most valuable MLS teams. Magic got in early, before the boom reached full speed. This wasn't luck, this was pattern recognition. Magic saw rising immigrant populations, youth engagement with soccer, growing media rights, a global fan base, and long-term valuation upside. LAFC is a long-term play, and a smart one. The Washington Commanders, the historic move. Then came the move that sent shockwaves through sports. Magic joined the ownership group that purchased the Washington Commanders for a record-breaking $6.05 billion, the highest price ever paid for a sports team in history. Magic was now part of NBA history, MLB history, WNBA history, MLS history, and NFL history. This wasn't about sports. This was about entering the highest rooms in American business. NFL ownership is considered the toughest club to join, the most powerful, the most profitable, and the most exclusive. And Magic walked in like he belonged there, because he did. While we don't have exact numbers on Magic's percentage ownership, even a small fraction of a $6.05 billion franchise represents life-changing generational wealth. This is the wealth game very few ever reach. It's not checks, it's not salary, it's not endorsements. It's equity in the most powerful brands on earth. Wealth mode lessons. Number 1, buy assets that grow while you sleep. Dodgers doubled from $2.15 billion to $4.2 billion. Magic's stake grew with it. Number 2, ownership creates automatic wealth. Even a small percentage of a $6 billion team is worth more than most careers pay in a lifetime. Number 3, diversification protects your empire. Magic owns across MLB, WNBA, MLS, NFL. He spread influence across 4 leagues. Number 4, get in early on rising markets. MLS teams grew from $20 to $30 million valuations years ago to hundreds of millions today. Magic got in before it peaked. Magic didn't become wealthy because he was Magic Johnson. Magic became wealthy because he played the ownership game at the highest and smartest level. Business leadership and media influence. By the time Magic entered sports ownership, he had already built an empire that spanned entertainment, coffee, restaurants, real estate, healthcare, fitness, retail, and now professional sports. But wealth isn't just about money. It's about position. It's about influence. It's about trust. Magic Johnson went from being respected as an athlete to being trusted as a businessman, and then elevated to something even bigger, a business leader people listen to. Brands wanted Magic's mind, not just his name. Once companies saw Magic's success in underserved markets, they started calling, not to use his image, but to use his insight. Magic understood communities that corporate America struggled to understand. He understood cultural buying patterns. He understood spending behavior. He understood how to build trust in places most CEOs had never even visited. So Magic became a voice for brand strategy, community development, diversity in business, entrepreneurship, corporate outreach. Companies hired him not for marketing, but for guidance. Real example, Magic served on the board of Square, the financial tech company founded by Jack Dorsey. When Magic joined in 2013, Square's valuation was roughly $3.2 billion. In the years that followed, the company, now Block Inc., has hit valuations over $40 to $50 billion, depending on market conditions. Magic didn't do this alone, but his presence mattered, his leadership mattered, his perspective mattered. It proved CEOs didn't just value his fame, they valued his mind. Magic Johnson Enterprises, the power behind the brand. Magic's company, Magic Johnson Enterprises, became the umbrella for everything. Partnerships, investments, ownership stakes, development projects, private equity deals, community initiatives. With an estimated valuation in the hundreds of millions, Magic Johnson Enterprises quietly became one of the most successful Black-owned companies in America. This wasn't just entrepreneurship, it was institution building. Magic wasn't navigating business, he was shaping markets. The community effect. Magic didn't just build wealth for himself, he built jobs, training programs, safer shopping districts, new entertainment areas, new food options, and healthcare access in neighborhoods that had been ignored for decades. When Magic builds something in a community, the average income goes up and local economic activity increases. For example, a Magic Johnson retail center could generate tens of millions in yearly economic activity. A Starbucks he opened could outperform suburban stores by 10 and 20%. A 24-hour fitness could bring new jobs, safer environments, and steady local foot traffic. Magic's projects didn't just make him rich, they made entire communities richer. That's generational impact. Public trust equals business leverage. By the late 2010s and into the 2020s, Magic had become a trusted voice, someone CEOs called when they needed help understanding culture or connecting with communities. His leadership made him a board member, a speaker, an advisor, a philanthropist, a partner in citywide projects, and a bridge between businesses and communities. This trust is why Magic could walk into the ownership rooms of MLB, WNBA, MLS, and the NFL and be taken seriously. Magic didn't just buy his way into those rooms, he earned his way in. Wealth mode lessons. 1. Influence is an asset. Companies with Magic on the board saw valuations rise into the billions. Number 2. Build a company, not just a brand. Magic Johnson Enterprises controls deals worth hundreds of millions. Number 3. Serve people and people elevate you. Magic's community projects increased local spending power by millions each year. Number 4. Your name opens doors. Your value keeps them open. Magic Johnson didn't become a great businessman by copying wealthy people. He became a great businessman by understanding people. The Magic Johnson Wealth Blueprint. Magic Johnson didn't become wealthy because he won championships. He didn't become wealthy because he was famous. He became wealthy because he learned how to think differently, how to spot opportunity, and how to play a game most people never study. His success didn't come from luck. It came from a blueprint you can learn from, a blueprint anyone can apply, a blueprint built on ownership, strategy, and service. Wealth Mode Blueprint Lesson 1. Turn failure into strategy. Magic's first business loss, the record label, cost him money, but it taught him the lesson that changed everything. Don't build a business you don't understand. Build a business that solves a real problem. Because once Magic started solving real problems, the money followed. Wealth Mode Blueprint Lesson 2. Serve the market everyone else ignores. Magic didn't chase the suburbs. He didn't chase the wealthy. He didn't chase the trendy markets. He served the places corporations avoided, places with $700 billion in spending power that companies pretended didn't exist. He built theaters, Starbucks stores, fitness centers, restaurants, and retail centers in neighborhoods with real demand and real pride. Wealth Mode Blueprint Lesson 3. Choose cash flow over fame. Endorsements end, salaries end, player careers end. Cash flow does not. Magic's franchise alone likely generated $240,000 to $480,000 a year from TGI Fridays, $100,000 to $300,000 a year from Burger King, and millions in total revenue across multiple gym and retail operations. This wasn't glamorous money. This wasn't celebrity money. This was wealth that stacks quietly, month by month. Wealth Mode Blueprint Lesson 4. Own what you build. Magic didn't just partner with Starbucks. He owned part of the venture. He didn't just endorse theaters. He owned equity. He didn't just attend Dodgers games. He owned part of the team. Ownership is how Magic multiplied his wealth. Look at the numbers. Dodgers valuation in 2012, $2.15 billion. Dodgers valuation today, $4.2 billion. Magic's portion of that increase, likely tens of millions of dollars without him doing anything. This is wealth that grows while you sleep. Wealth Mode Blueprint Lesson 5. Get in early on rising markets. Magic bought in the MLS before soccer valuations exploded. He joined the WNBA before the league hit record viewership. He entered healthcare before it became a major private equity target. He didn't follow trends, he anticipated them. This turned $500,000 opportunities into $10 million outcomes and $2 billion assets into $4 billion giants. Magic didn't find wealth, he recognized it early. Wealth Mode Blueprint Lesson 6. Your name opens doors, your value keeps them open. Magic didn't get into NFL ownership because he was Magic Johnson. He got in because he built communities, grew real businesses, drove millions in economic activity, built trust with CEOs, proved he understood markets, and showed he could scale brands. Corporate America respected him because he had receipts. This is how you go from celebrity to partner, from partner to owner, from owner to legacy. Wealth Mode Blueprint Lesson 7. Build a company bigger than you. Magic Johnson Enterprises controls deals across entertainment, healthcare, tech, sports, real estate, food and beverage. Its valuation sits in the hundreds of millions and continues to grow. Magic built something that will outlive him and his basketball career. That's the ultimate wealth move. The final message. Magic Johnson didn't come from privilege. He didn't inherit money. He didn't stumble into success. He learned, he failed, he studied people, he saw opportunity where others saw risk. He invested in communities when companies walked away from him. He used ownership to lift himself and everyone around him. He didn't build a brand, he built a blueprint. And if you follow the lessons in his story, you can build your own. This is Wealth Mode.